Good afternoon, everyone, and welcome to Monday, November 17th, 2025 edition of Trading Trends ETF edition. Let's get right into it. Not a very fun day, but I will say, thankfully, crypto isn't the market and the market isn't crypto, but obviously it, of course, alludes to, risk-off sentiment. And we'll take a look at some really important charts that have been brewing, and we'll see what is going on with the week holds, of course, especially ahead of Wednesday's big catalyst in NVIDIA earnings. And if they're going to talk about making $500 billion or something next quarter. So let's see. Today, this is what we were talking about. Regional banks and financials were the pull down on this market, a multiple, about a 3 to 3.5 sigma move for regional banks. Not good. Unfortunately, the chart was looking very weak recently, but global financials had really been looking good. South American financials, European financials through EUFN and individual components of. But here, stateside, not so great. Is it overspend on AI? And it's got some investors freaked out. We'll take a look at the chart and where the levels are. Germany, another sale today. It had a great run recently, and then it got hammered on Friday. Today, down again. And Taiwan. So today, a little bit of an international drop, but we'll see where strength lies. And volatility with a nice rally, VXX. We'll look at the level that you should look for on that specific ETF. So without further ado, let's go to the dashboard panel here and let's get into it. Boopity bop. All right, here we go. Really fast. Look at some individual movers. Tesla broke the trend, up 1.1%. NVIDIA down 1.8%. Google up 3.1% on that big Warren Buffett, Berkshire buying at $4 billion of shares. So he's chasing this AI trade higher. I think it's overall a good thing, but just not the week for markets. IWM small caps down 2%. It fared the worst of the major indices. Not a good day for small caps. Apple down 1.8%. Meta down 1.2%. AMD down 2.5%. I was getting close to, I didn't do much today in terms of trading. I was getting very close to buying AMD. But the market still looks like it still wants to test some further downside. I'll show you what I mean in the charts. Palantir down 1.5%. Micron, the perfect stock, down 2%. So that's not a good signal when the perfect stock is down 2%. Gold, they hit down 1.1%. Bitcoin, we'll take a look. The ETF was down 2.5% for IBIT. Robinhood down 5%. And Coinbase down 7%. A big 7%. So if you're in crypto, you're getting smashed here. It's just continuing to go lower. But like I said, thankfully, Bitcoin is not, or crypto is not the entire market. Real fast, let's get to the intraday chart on SPY. Here is the open, and it looks like they were kind of hanging in. I like to see that doji here at 11 a.m. And then this was pretty much the final buy candle that we had, 11:30 a.m. And then after that, once New York lunch came and they closed in the, we went under VWAP at 12:30 p.m. They truly did not stop till about 3 o'clock when it hit 662, and you could see a pretty weak rally here, even though there was some bids at 3:30 p.m. to take us from 662 to 666, the sign of the beast. We could not even get to VWAP, which was 66767. So pretty weak overall on the day. We did have above average volumes by 83 million shares. So as we look at the chart and I zoom out here in terms of the 1 year view, it's taking a little bit longer here. We expected a bounce. Again, all-time highs were back here on October 29th. I do not think highs are in the background, and we tank from here. We still have a beautiful rising 200-day moving average. Don't love the RSI here at 43.5. That is ugly, but I do want to say this is very close to where we've bottomed since the 52-week lows back in the spring in April. So that's a good sign, but it could linger here for a while. You see the stochastic momentum mix too, giving up as much as it had. This is very, if you look at the, I'm not going to put an overlay here because we're going to go through a monster amount of charts. But if you look at this drop from over here from 674 down to 656, somewhat similar from 687 to 666. And then after that, we rally to new highs and it resolves higher. It's kind of what I'm thinking here, but it's taking a long time. The floor for me now, because we don't get paid to think, you get paid to be right and make money. To me, the low here that has to hold is 666 or 660. That is your lower Bollinger Band here, and I just highlighted. I don't want to see us take out that October 10th scare and the whole week that ensued after that. You want to see us maybe go 1% lower. So if we're down 40, 50, 60 bips tomorrow, and then we bounce Wednesday again, NVIDIA's Wednesday night, going to be a big day. I still think the flows in the SPY look okay. Not happy with the performance of the regionals because people do look at financials, of course, to see the overall strength of the market. So all that being said, like I said, the risk reward, I think you have a 1% to the downside from here. I do still think we pop at some point this week to 675. I know Tom Lee's been saying Ethereum will bounce this week or bottom this week. I kind of think, and thereby basically says the same thing about Bitcoin. I kind of think the same thing about the markets here. It's been a while coming here, and that spooked us a little bit on the 12th. 5 days ago, kind of gave us a fail there, and then you see these lows holding at 662 or so. So that's pretty much it. We got to hold 675 first to let me really convince myself that the rally is back on, but the chart looks fine. And then we'll go into the internals in terms of the sectors. Things aren't absolutely falling apart, but we'll see what they hammer today. And like I said, I'm still holding, instead of that Thanksgiving week, I did say late November, early December. It's looking probably, just because it looks like it's going to take a little bit more time, I think the all-time highs for SPY come in very early December, maybe like Black Friday or that, that following Monday, Tuesday. Maybe when we got those Black Friday retail sales, maybe the consumer isn't that bad. Isn't that down on his luck there, but I still have a 690 293 target, as high as 695 for early December, probably leading right into that Fed meeting. It looks like they're not going to cut now. I think this is what the market's digesting. Speaking of which, let's get right into it with the big movers. We'll go to the upside first because that's the way we do things here. We go to the big upside and the big downside. There's only two big upsides, and one is inverse, so it's not really a good, a bull market instrument here. It's VXX. VXX, or Volatility, was up 5.1%. Whoops, that did not load properly. Hold the phone. Oh boy, hold on. Uno momento, por favor. We'll take a look at VIX, or VXX rather, up 5.1. I don't know why it's lagging here. I was on the one here. There we go. All right, so here's VXX. I mean, come on. This is the fear in the market. If you're talking about SPY going 52-week lows, obviously it did it very quickly here in VXX. I don't love seeing VXX at 57. RSI, conversely, what we're just talking about, S&P, SPY bottoming right around the 42 since the recovery. VXX is a little bit more sloppy. This has not gotten overbought, but we have had some crazy peaks in terms of fear. This thing has gotten to above 60 two times, both in October. We're at 57 here. This has had surprising strength. If you remember what I said before in the video, I said once this thing tops 40, you're going to know that the downturn and the scare is done. What happened here just recently, I mean, we got to 36.78 the other day. Today, 37, and you see where we close here at 36. So while this may have a couple of days while the S&P bases and bottoms this week, this could, I see it pierce 38, and you get some vol expansion, as you're seeing today, up 5.1. And then I still think the level I'm watching here is still $38. Like I said, I don't want to see us go below those levels in SPY on the 16th, 17th, and it's the same thing for VXX. I don't want to see us go north of 40. It lets me know that folks are really bidding up puts and they're scared about downside, and it's not just an end of year type movement. In terms of seasonality, I'd be more having spidey senses tingle knowing that. But still, I think things look pretty much normal. Like I said, another 1.5, maybe another 5% rally for VXX. And then I do expect this thing to be at, when I know that the downturn, similar to say 675 holds in SPY and it holds there above 2, 3, 4 days, the similar level will be VXX and break down under 34. That's what you want to see. It's where my cursor is right here. That's a 21-day exponential moving average. Once it starts going there and starts going lower, as the moving averages are, I still think you'll see this resolve to the downside and SPY to the upside. But that's the call for VXX. And we'll take a look at it later in the best past 5 days because it's on the charts, of course. It's on that breakdown. Number 2 is Chile. This is not risk off, and this is what makes me think that obviously crypto is not the market, and S&P we're still just 4% from all-time highs. It's not a horrendous number here. Look at this. Chile not a great looking candle in terms of they sent it to 37.92, and then they sold it lower. But VWAP on the day was 37.41. We closed it just beneath that, and that's why that candle looks like you have that wick standing out here. But nevertheless, 52-week high is a 52-week high. It didn't get overbought, so there's a bearish divergence here. But Chile, an amazing day, up 2.5%. It's on a very high volume ETF, so I'm not so sure how many folks got into this. But a 52-week high, I want to highlight strength and weakness. And this chart just looks great. Even back in April, this just had a barely touch under a rising 200-day moving average. And that's the last time this ETF was really in trouble. The 52-week low coming at the start of the year in January. But this chart looks great. I personally wouldn't chase it here. I'm not chasing too many things here, honestly. But my head level for this is 37. And it literally tagged it today, 37.90, and went back down. I wouldn't chase this. This looks like maybe 35.40. And the last thing, we'll look at some, let's get into the down moves here. We were really very bullish on Friday night. I kept on saying bullish, bullish, bullish. I didn't say Monday we were going to pop up, 4%. But I do still believe we are going to base this week. We'll take a look at what is scaring the market, and it was the multiple, truly almost a 4 standard deviation mover, because it typically moves about 1% a day. And this is what has people freaked out, is the regional banks. This came in my screener to short over the weekend, and I wanted to act on it. I thought the global bull rally was going to ensue, and regionals and banks and financials would be lifted up. And the problem I made was I thought, instead of just reading the charts. When I read the charts, KRE looks weak, and I should have taken the trade, and that's the kind of vulnerability and the openness we have here on the program. Here's the difference, though, what I think. Back on October 16th, we had that big regional bank scare. It was very scary, down 6.25%. This has been a weak group, though. This has not been above 50 RSI since late September, truly September 23rd, when it was not able to take out those highs above 66. And the 200 moving average has now been going lower. It is stuck here at 59.85, call it. And while this group is not, it's just kind of dead money to me. I wrote about it in the chart advisor last week. Look at it. I have my cursor on it right here. The 200 moving average has literally been the same figure, about $60 even, from July 31st through basically Friday. So just kind of dead money. I'm not super shocked to see them hammer it. But in terms of levels, give me a sec here. So the reason why I did not like the action, this thing could not even forget the old highs at 66, and the 52-week high came truly a year ago at 70. That is long in the rear view. But here, not only could it not tangle with the former highs, the interim highs at 66, this thing couldn't even get 62 on the rally. And look at that rejection 5 days ago at 62.5, and boom, it plummeted here. This looks not so great. To me, I still think it did a lot in a little, meaning today's drop was probably the lion's share of the move. I do have a bottom target of 57.5, and that's not so bullish. 57.5 is right there, truly the bottom from October 16th, that scare day. I do think it probably gets close to that, which is holding a lid on SPY, and it also very it's the same level essentially as August 1st. I think those levels will be visited very soon, unfortunately. So if you're short the KRE, I think 57.5 is your stop level. That's 110 away from here, or about roughly another 1.5 to 2% downside. And in terms of the intraday, the low today was 58.45. They closed it pretty much very close to that. The VWAP was 59.32, and it wasn't close to that. So, and again, no enthusiasm for this group since late September. So regional banks continue to be in the mud. Wish I took that short. I did not. Next one, EWG Germany. I didn't even have to change this on the sheet. If you recall, Friday, the second biggest standard deviation mover lower was Germany. Today, it's like Groundhog's Day, down 2.1%. This group, Germany peaked, great looking chart, but it is definitely entering purgatory right here, as it has a close under the 200-day moving average. I believe that's the first time since January that Germany, EWG, has closed underneath its 200-day moving average. So Germany is obviously one of the biggest economies in the world. So when I see risk off things like this, you see crypto trade to beyond 6-month lows and it's trading crap like the way it is. Does it live in a vacuum? No, because this is risk on, risk off. And to me, before I'd written about it, $43 for Germany and 40 seemed to be the range. It was, basically almost range bound. I was talking about selling those strangles. It's almost breaking that here. The 200-day moving average is at 40. Where is it here? The 200-day moving average is at 40.22, and we're beneath that here by 0.5% on this bloody day in Germany. I think this is a messy chart due to the highs coming 4 months ago and for being range bound, but with a rising 200-day moving average. So I want to give it a long leash. I think this maybe is tough because today was an ugly candle. I think it maybe still has a move in the next 5 days this week to about 41 even to recoup that here, right where my cursor is. And so it can remove these couple of bad prints here and then put that floor in and start at least trading and normalize and live with that 41 handle. I think that's what is going to happen this week in Germany. Still a great looking chart. This is not regional banks. And you have had some, exuberance here in Germany above 50 RSI several times, but in the past month, not so much. So that is Germany. They hammered it today, down 2.1%. And then Taiwan, this did not, help my EEM position, of course. Taiwan down 3.1%. That is a big move, okay? I'm not even getting to, other parts of the market today. They got flushed. But here is EWT. Let me make sure this is right because this thing is bothering me here on the screen here. Okay, oopsie. All right. I think Taiwan looks good here. Today was not a great day. Let me take back what I said. I don't think it looks great here. The candle looks ugly, but it looks like to me in a lot of global markets, we want to get back to those October 10th lows. That was a flush out. I remember saying this was a great thing for the market to flush out the weak hands. I think the market wants to do it again. It did it 5 weeks ago. I think it's prepping to do it again, do something, straight to 1-2 month lows. So ugly candle. They tried to rally it too in Taiwan. They took it to 63.99 and then no sir. So it closes down 3.1%. The VWAP on the day was 63.35 and it could not get there. Came close, but could not do it. And this thing's fell out of bed coming off the 52-week highs that was struck 2 days before Halloween at 67.60 basically. So a $4 drop. I still think it looks good here and constructive. I don't know if I want to buy it first thing tomorrow morning, but I do think this is at $65 in roughly 2 weeks with a chance at 67. I know it sounds crazy, but I just read the charts. And the trend is your friend until the end. So I still think EM is going to turn around. I think SPY, I think a lot of these things, but they're just taking longer than expected. There is more weakness than I had thought. All right, so that was the big losers on the day. Regional banks, Germany and Taiwan to the upside, just volatility, which is actually a down move, and Chile. Chile, really, an entire global market was really the only bright spot, so not much. Top 3 gainers of the past 5 days. We go to the number 1 gainer of the past 5 days, so that would be today, plus or minus the previous 4, of course. It is VXX up 11%, okay, an average of roughly 2% a day. You got to see that do obviously less than 2%. So today at 5% tells me it's not done yet. I'm not expecting a massive crash, tomorrow in VXX. Looking forward to base, and then start to give way. But VXX has been your biggest gainer in the week to the upside. Let's go to the next one. Your second biggest gainer, it's nowhere near 11%. This is actually a long, and it's XBI up 4%. So this is what I'm saying. Some of the crosshairs, is it breadth deterioration or is it market rotation? And that's pretty important. When people buy biotech, that's absolutely cracked out being risk on. So it's interesting when you see Germany get sold off, an amazing chart, and then biotech, some of these companies that have no revenue, and folks are taking this to 52-week high. It lets me know that things are still okay. And SPY is 4% away from all-time highs. I can't get really that freaked out about it. Here is XBI, as I said, a new 52-week high. They actually shot this to 116.18, and then it sold off a little bit. View up on the day that was 114.70, essentially where we closed. XBI has been on a major run here. It's up 4% in the past 5 days. Today, up 70 bips and an ugly tape. So healthcare, and healthcare is actually the next chart we'll look at. There were not a lot of safe havens today. XBI continues we put out an alert or a note here on November the 10th, 7 days ago, to get into XBI at 110. I'm going to show you right here on the cursor right there. VWAP that day was 110. You don't have to chase or anything like that. And our target is 115. Let me check right here if anything has changed. I would say maybe 117. It was encouraging and interesting to see it send it as high as 116 today, and then it got rejected. I think it just wasn't ready today. I still am envisioning another week or so of bullishness for this group to send it to about 117, and then that'll be your exit. And I bet you the correction in that takes it down to about that 110, 111 handle. Possibly, if it happens sooner in terms of the drawdown, the move lower, just because I see that bearish divergence here. It rejected that 116 high on the day, and we have only a 66 RSI. So weight of the evidence kind of approach. Also, we're going to be discussing all this on Spaces tomorrow on X with the chart report guys. So take a look at that. So that's Biotech. I don't know where you can be if Biotech is hitting 52-week high. It's not anecdotal or coincidental. That's pretty important stuff. So that's XBI, your 52-week high today of 4%, your second biggest gainer over the past 5 days after VXX. So truly the actual star, if there were one, is Biotech. And then we'll go to the sector that it belongs to. The big behemoth is XLV. XLV, almost a similar looking candle on the 13th. It was not ready for that prime time of going to 154 half. Speaking of prime time, go Birds. Put anyone in front of them, they'll beat you. I don't care how they do it. This was not ready for 154 half, even though it was overbought, and then they rejected it and went lower. Healthcare, why are we talking about it? Up 3% over the past 5 days. Does not seem like a lot. It's your third biggest gainer, actually second, because VXX is not, constitute a long. So this, to me, has had a beautiful run. It was basically the same as XBI. November the 6th, I had a point of interest on this right here when it was trading 145 half, and our note was saying take this to 149 right here with the latest. I think this is getting a little bit rich. 151 to me is the target, and that's where it is today. I personally wouldn't chase this. It is going to be a sector that I think has legs, but for this strictly tactical trading, I wouldn't personally do a ton. It's actually a pretty interesting time to trade because if you think you've noticed I haven't given a bunch of derivatives recommendations here, because if you think the market, it's better to sit in your hands, I think, and do nothing, because if you think the market rally begins this week and we get back to our ways, you want to sell puts, but that's a pretty dangerous area to do these things. And if you want to sell calls, we're prepared for the market to actually do what we're thinking it's going to do and go higher. So you want to be careful on that as well. So, and volatility has been on the rise. So it's better to do on a name by name, sector by sector, subsector by subsector basis, I think, than doing it at the cap level. So that is healthcare up 3%. Like I said, I'm not going to chase this here. I actually think the next 2 weeks or so will bring this down to the 147 level, or a reduction of $4, and that will be your invitation to get into a fire sector. Let's go to the 3 losers of the past 5 days. This is going to turn into the crypto show now, because when you talk bloodbath, how can you escape crypto? Ethereum, your number one loser, down 17%. Look, it looks like Germany in terms of that, touching its 200-day moving average. This ETF barely has 200 days of history. So this is the Ishares Ethereum Trust. This is down 16.5%, 17%, let's say, over the past 5 days, or an average of 3% a day. It trumped that today, down 4%. So not super great. Lets me know this wants to go a little bit lower. So then you have to look at where. Oh boy. Oh, Ethereum. How do you solve a problem like Ethereum? Like I said, I'm in agreement with Tom Lee. I think this base is right around here. The 200-day moving average, in case you can't see, is 2308. We closed at 2262. It's Ethereum, for goodness sakes. So the volatility, let the rubber band go. I still remember back here, I think it was August, September timeframe. We said, what will take this this beast of Ethereum down? And then look what happens. Since October 9th, this thing has not been above 50 RSI, meaning as soon as the tough gets going, folks sell first and ask questions later. And they did that from the 33 handle all the way to today, down to the 22 handle. Now what? And this is part of a problem. I think we do rally soon, but it looks exceptionally weak. Ethereum especially has been getting its butt kicked by SPY in a head-to-head since November the 1st. So the past 2.5 weeks have been extremely bloody for Ethereum. There's been ugly money flow. The orders at the end of the day, folks have not wanted to get long crypto. It does happen, but like to compare, that wasn't the same kind of a sell-off off the highs, but you could see we went from 36 to 29. Folks didn't like that. And then over here, again, they're really not the same in magnitude. You went from 21.5 to 16. That was an ugly move, and then woof, it recovered. That was actually under the 200 moving average. It was flat. So it's not looking good. I'll just come out with the next 2 weeks. I think this rallies to about $27, which is a massive move. That's $4, or what is that now? Because the price keeps going lower and lower. That's like 16%, something like that. But the overhead, what I'm concerned about, if you're long Ethereum like I am in January calls, the overhead here, I mean, the prior highs are $37, call it. The overhead at 32 is significant. So I think you'll get that bump to 27. It's not going to be a straight line. I think it's going to take about into early December. So that's calling Ethereum. Let's get to crypto. IBIT, probably pretty similar. So here's the IBIT chart. You remember, so this is weaker here. So who's leading? Is it Bitcoin or is it Ethereum? Bitcoin has been under its 200-day moving average since, and we commented on it then, since the 4th, since election day of this year. And now we're just plummeting. You see this, just ugly candles. Just ugly candles. Let me pull up something here on a different view. I still think it's taking, like I said, longer than expected. I thought this would hold around 54, which is $4 below the 200-day moving average. So I gave it enough wiggle. And this is something you don't like to see. IBIT's a superstar. Hopefully BlackRock doesn't let it get beneath, getting oversold. But this is, you see that meme with the Cheeto holding the door lock. This is basically the support here for IBIT not being oversold. It has not done it. Even in April, when the U.S. stock market hit 52-week lows, IBIT had a 38 RSI. The closest you get here goes back to February 27th. It did technically pierce. It was a 29.96, so we'll call that, of course, a 30. And it looks like it's getting there very soon. IBIT, ugly money flow also since about November the 1st. If you look at those candles, they've really been, saying sell, Mortimer, sell. And the relative strength versus S&P has been just absolutely just dramatically ugly. So in terms of IBIT, over the next 2 weeks, not going to be a straight line. I do think this gets to 60. The good news is that should reinforce the support of the 200-day moving average, which is at right now $59, $7 away. I do think it takes it back. The problem is the overhead. Everyone is a seller of this, it seems, at $65. It kind of goes back to what I said before. He needs to get above 50 RSI, which coincides with the stock price getting above $65, and we're trading 52. So that's quite a ways away. So short term, not a linear, path, but the next 2 weeks or so, 2 to 3 weeks, I do see us getting to $60 on IBIT. Alrighty, and that would be very constructive in that the 200-day moving average would be, held. I just also want to comment, last thing on this, the 200-day moving average is now going down. It just started on the 13th, 4 days ago, by about a penny a day, 3 pennies a day now. So you don't like to see that happen. The view clearly of crypto is changing for now. More to come. And again, the 52-week low on this, if you're looking at the absolute floor for that, of course, crypto can go to zero, as anything can. But $43 is your 52-week low there. So if you do your 1 year 50%, Fibonacci retracement, 43 to about 73, call it, just make the math even. You're in no man's land here. Once you broke that 58 level is so important, and we've been purgatory, downgraded to hell since the 4th. Okay, and then next, also in this trade, uranium, ugly. Just getting the numbers. Ethereum was down 16.5%. IBIT down 14% over the past 5 days, and this one, uranium rounding out the losers here. And this will be our last chart of the day. Uranium down 2 1/3% today. Been an ugly chart. We think it's ending. Again, all the charts are giving me kind of similar vibes. We think it's ending soon. We kind of had this consolidation in the cards. I actually sold this week's November put spread about 3 weeks ago, right at these levels. So it's getting very close. I'm holding until Friday. This just recently started getting its butt kicked from SPY in a head-to-head because it had been constructive for a while. The 50 RSI started giving way right there on about the 4th. A lot of things changed in terms of election day, like just bearishness in many different charts, especially the high beta momentum trades, and then ugly money flow as well. So you're seeing, big exits for now out of the momentum trades. This looks like it needs a couple more days, hopefully before Friday for me in my book. But I think the 44 level should hold. Today's down 3.1% candle. It's been down, 11% over the past 5 days, or an average 2% a day. You got to see that get cut at least in half, and then just start to digest the gains, or losses, I should say, and then start to squeak higher. You have a beautiful rising 200 moving average at 36 even. This looks similar to the other chart that we were just Bitcoin, IBIT, with it not being oversold, except here coming back in April. Uranium really found its way back right here in mid-May. Beautiful move at $27, and you get that breakout 33, and you can see the measured moves 42, and my God, all the way to 60. And trees don't grow to the sky. Haven't said that once today. So for the uranium chart, I think it's going to have a decent 2 to 3 weeks. It has to. I think it's got to get about $47. I see some resistance there, and then I want it to get to the 21-day exponential moving average, which is 49.5. And then we'll go from there. Again, you're seeing these W patterns globally, essentially. 49.5 for uranium puts it right there where the W should have held, minus all this garbage that started after election day. So you want to see this, but it absolutely broke off and fell down. So I think that is what's going to happen. You got to move to 49.5. That's $6. That's a massive move. Ideally, I would have had my target at 57 right here, back to near the former highs. I am not so sure that is happening right here. You need a much more global bullishness and a lot of constructive charts. Like I said, I think a lot of this is the market digesting that the Fed will not cut in December. So like a 43% chance now, I believe, last I saw on the CME Fed Watch. And the market is, equalizing a lot of that, digesting and seeing if it's AI overspend or these regional banks handing out too much money. What will they do if rates stay where they are? How will that claim or change the unemployment picture with all the AI taking away from entry-level jobs and young grads, etc. So the market's trying to digest this while it's still up 14% year-to-date in SPY. So just calm yourselves. You have a rising 200-day moving average in many charts. Crypto is not the entire market, though, of course, is a risk on sentiment. All right, we will talk to y'all on Wednesday, a big, big, big day with NVIDIA earnings after the bell. Peace.